Nvidia is our call of the day. Why? Because it got double upgraded today to outperform at Wells Fargo. That's after more than 2 years with a sell rating. It's our call of the day. They also raised the price target to $315. Shares are lower today. They're still up 30% on the year. Let's preface this before you guys
trash it.
Trash the call. It was a prior analyst who had a sell on it for a long time. Stock was up like 1,200% over that period of time. No longer covering the company. New analyst assumes coverage of it. Thus the double move. Preface that before you rip this person's head off.
And the price target and the whole deal,
How about the call? Too late to get in?
I think it's okay. I think it's a stock that has, we know, an unbelievable run. It's down a little bit. I mean, a little. It's up 33% as of today. Right now, 33% year to date. It's still a cyclical industry. And the reason people love it, however, is because Nvidia is really the go-to chip supplier for artificial intelligence. And that, as we know, is just widespread and growing like gangbusters. So if you want to play that, you buy Nvidia. On the other hand, it's a very expensive stock, and I think it still has cyclical risk. The trade issues, of course, might be a factor for this one. And, you know, I just think that it's a little rich for me to buy it here.
I disagree with every single thing you said, but I love you anyway.
I knew he was going to say that.
Well, so let's
I'm
debate
so
again.
happy to hear that.
Let's have a friendly debate.
Let's go one by one. Number one, yes, the semiconductor industry is cyclical. The industries that Nvidia.
So you agree with something I said?
Yes,
okay.
but.
So not every single.
But it's not. Yeah. But that was not a relevant statement when it comes to Nvidia because where they're selling chips into are all secular growth stories. They're not selling into cyclical parts of what semis traditionally have sold into, wireless phones, PCs. No, that will change, of course. Everything eventually becomes cyclical. Yeah. But right now, when we talk about robotics and AI and deep learning and machine learning, none of these things are cyclical. This is emerging industries that are going to consume an extraordinary amount of silicon, and none of them are cyclical. So throw that out. And server and cloud, and I could just go down the list. But bigger picture on valuation, it's 33 times forward earnings, which of course is more expensive than the S&P, probably because they're growing earnings twice as fast. And more importantly,
whoa,
hold on, one last thing.
The expectation that they're growing earnings that fast. They might.
No, they literally are, though.
Okay. But you've got your crystal ball.
I can't tell you what next quarter will be, but the current growth rate is faster, and the stock is less expensive than it was at $150 a share 100 points ago when it was selling at 45, and you would have said, well, it's expensive then too. Turns out earnings grew faster than the multiple, so actually it was cheaper 100 points. It was cheaper at a higher valuation 100 points ago. So it's important to look at when we say something's cheap or expensive relative to what?
Correct. So it's less expensive than it was. It's more expensive than the S&P and many other tech companies.
Shouldn't it be?
Oh, it should be. It definitely should be. So then it's a question
Your Honor,
of
the defense
judgment.
rests.
It's judgment. I didn't say I didn't like I didn't say I didn't like the company. I didn't say that it's a terrible idea. I said for us, we wouldn't buy it today. But if you can tolerate that kind of risk, I think that go right ahead. I wouldn't buy a full position today.
There are stocks selling at lower multiples than the market that I would argue are more risky because they're in industries that are disappearing.
Yes,
right.
Of course.
Well, and two of the things that are working against these guys, at least in the short term, Tepper, I think, dumped out of this one in his most recent filing that just came out. That's not saying David Tepper is like John, and neither one of them is always right. However, when you're looking at this particular trade, and you're seeing the cryptocurrency side of that, you know, if it's a four-legged stool, Josh, that they're talking about, and artificial intelligence for self-driving vehicles and things like that is part of it, and then cryptocurrency mining is part of it, and two of those are kind of like teetering, I think that's a problem for them. I think that's why Tepper dumped out. I will point out Lone Pine, however, did add to it. So if you'd rather be with Lone Pine than Tepper.
Let's be clear on the crypto thing as it pertains to Nvidia and maybe also AMD. Very, very marginal part of why anyone was ever bullish. And the evidence of that is this stock took off in 2015 2 years before Bitcoin did anything. Bitcoin was $300 I don't know, what do you call it, a coin? Or $200 a coin when Nvidia first broke out. And then in 2017, in the summer,
that was on the self-driving cars, the breakup.
Right. So July through December, there was this fever dream where Bitcoin was at 20,000 and headed to 80,000. And yes, you could argue there was some juice in AMD and Nvidia as a result of that. But stock is higher. AMD is higher than from where Bitcoin and Ethereum peaked. And so those are not an important leg of the stool. Maybe they're a mini leg of the stool or of a smaller version of the stool.
I find myself definitely agreeing with Josh on just about everything he's saying, and I'll just say it real quick. So you've got data center, you've got gaming, and you've got the incredible cash flows that they've got going on right now, and data center. So you put all those things together, and growth rate. Until that growth rate starts to decelerate, Josh is right, and you look at the forward PE of a 33, it's not that bad.
No,
so the growth that they've got right now, to Josh's point, their growth rate is so strong. Once that weakens, that's a problem. It becomes Under Armour from
Jensen
50 all the way
Wang,
down to 10.
the added thing is the vision thing from the CEO.
Point.
And I think when you look at this versus an Intel, there should be a higher multiple for management at this company than there is for most other semi companies.
Okay.